Welcome to your market news update. Today's top story. A potentially pivotal shift in Federal Reserve policy could soon spur significant moves across the stock market. Fed Governor Christopher Waller has signaled support for an interest rate cut as early as July. His dovish comments on CNBC suggesting that waiting to cut rates risks a downturn in the labor market were notably more aggressive than current market expectations, which had priced in a first cut later this year. This pivot has already buoyed investor sentiment, especially in rate-sensitive sectors like technology, real estate, and high-growth stocks, though the full market reaction will hinge on upcoming statements from other Fed officials. However, optimism is tempered by escalating geopolitical risks. The United States is reportedly preparing to cancel waivers, allowing major semiconductor firms such as TSMC, Samsung, and SK Hynix to supply their Chinese factories with U.S. technology. If confirmed, this move marks a sharp escalation in the U.S.-China tech conflict and threatens the revenue streams and operations of global chipmakers. Markets responded immediately with a sell-off in semiconductor stocks, and investors remain on alert for further developments. The outcome may force costly shifts in global supply chains, and any final decision will have lasting consequences for the tech sector. Elsewhere, a temporary easing of Middle East tensions follows President Trump's decision to delay potential military action against Iran. Oil prices have pulled back from recent highs, and global equities have briefly steadied, though volatility could return if the situation changes. In the corporate world, Home Depot's bid to acquire building materials distributor GMS has set the stage for a potential bidding war, boosting GMS shares while signaling further consolidation in the sector. Meanwhile, Tesla is launching its robotaxi service in Austin this weekend, a milestone for autonomous vehicles, though regulatory and safety concerns loom. Finally, eyes are on quarterly earnings from companies like Accenture, CarMax, Darden Restaurants, and Kroger. While unlikely to move the broader market alone, their results offer additional insight into the health of consumer and business spending. In conclusion, markets are caught in a high-wire act. Dovish Fed signals are battling significant geopolitical and sector-specific risks, particularly in technology. Stay tuned for updates on U.S.-China tech tensions, Fed commentary, and geopolitical headlines, as these factors are set to drive market sentiment in the days ahead.